Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to this morning's webinar. The US dollar returned after its long weekend due to Monday's closure in observance of Martin Luther King Jr. Day. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, surges higher and breaks through the recent support line that was resistance, and now at present is on track to retest the highs seen in late October around to the end of December, which is around 96.60.80. This on the flip side has seen the euro take a plummet and now looking towards this trend line, which is seen roughly around 112.70 to 85. In light of the pattern, I have allowed a little bit of slippage. The market is negative with the RSI breaking and also the MACD in a prime position to see a further fall. Could see this trend line taken out and therefore put on track the recent call of 111 figure 50, which is the broader picture. In light of the pattern, I feel we're still heading towards that region, especially with the US dollar recovering as it has. The Australian dollar respecting the support level around 71.60 after refreshing its intraday low of 71.69 overnight. In light of the technicals, we are still weak. I feel that eventually this level may actually give and therefore give it further exposure to the downside and look towards 70.90 as the broader objective and reassess from there. Interesting pattern for dollar yen after the recent bullish Dragonfly Doji. We've got a rejection to the top side. Now the call was only towards the level around 115.40.45. However, we only got to 115.05, a little short of its objective, and now gives us a mixed view in the next coming session. In light of the shorter time frame, looking at the 4 hours, is that we could still see another test up towards this top side. I'm not going to abandon it at the moment, so I feel the market may take one more challenge and then may see a rejection from that 115 area and look back towards the bottom side of the range, which harbours around 113 figure 15. The sterling was weaker overnight and heading closer towards the call of 135.35 to 45. We got to a low of 135.72. And in light of the last 3 candles since the posted gravestone doji, the market is on track to test this bottom side of the range. I'm not, from the broader sense, bearish. I feel the market actually may stage a rebound from this area and look back up towards 138. So it's just in conjunction of the actual short term or the secondary trend, and then the primary should kick back in again and look back towards that top side around 138. A little bit apprehensive in terms of taking the challenge higher for KGN, and the market still remains capped somewhere around the 91.80 to 92 figure. With the long-legged doji in place, does give a little bit of uncertainty. Do note though the RSI and the MACD is somewhat negative in terms of how the pattern's unfolding, and therefore eventually should see a pullback, and that is towards the support region anywhere towards 90.70 or with a base around 89.60.80. Gold a little bit weaker overnight, but it's not quite breaking beneath that 1,800 mark as of yet. But still, from a technical point, it is rather negative in terms of the RSI through the midway point, and the last 4 trading days have been somewhat negative. Therefore, I feel the market will eventually take out the support level 1,800 and then look down towards the region of 1,788 as a potential target. Wrapping up with oil, well, we've made a fresh high and now on track to challenge the region of 86 that could actually extend to $87 a barrel due to the strength of the trend, and we're not quite there yet in terms of extreme overbought, but we're getting close. Still, the market posted a fresh high of 85.89, and let's see if $86 to 87 can be achievable and reassess from there. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the wrap up for the day, and also keep an eye out for the intraday report that will be released shortly.